Welcome back to Ferocious Education. This is Ed. Today we're going to be talking about Clover Health, going with the ticker CLOV. Now I'm going to go through the latest updates if there is much of that to go through, and then a little bit towards institutional buyers, and then technical analysis, as well as referring to their upcoming earnings. So let's jump right into this one. Clover Health. We've covered this one multiple times before. My previous video is in the description below, but if you would like to watch more about it, I will include the playlist link in the description below. Now, when it comes in towards Clover Health, I do believe in this company and what they do. And just a quick reminder, in the 2021 estimated revenue, compared to the actual 2020 overall, you're looking at a good increase in terms of the adjusted EBITDA margin. So this year here is very important and crucial towards the long-term vision towards 2023. And so, for instance, the average MA membership, you're looking at 73,477. Moving on towards member growth, we're expecting around 30% year over year member growth, and as well premium revenue to be somewhere around 872 million in this year. Now, of course, we're looking into quarter one 2021, which of course wouldn't be as much as an increase as you would think, because usually growth happens quarter per quarter. Nonetheless, the first quarter of 2020, the membership growth there was around 55,444. So we should have an expectancies there for an average membership to be somewhere closer to around 55 to 60,000 members. Now, total revenue for year over year was around 166 million. It went to 172, 169, and then from there to 166. So we're expecting for it to hover somewhere around 166 to 170 million. Now, the current revenue anticipated by 2021, you're looking at 872. You divide that by 4, it is more than 200 and almost 20 million. So we're going to be able to see whether we reach that 220 million in revenue by quarter one or not. Let's cut them some slack and say, okay, perhaps it would be 200 million, not 220. And so that 200 million there, you get to see that it is a stepping stone towards going to 2022, 2023, and becoming net profitable. Now, the earnings is actually on May 17th, 2021, on Monday. And the conference will be around 8:30 a.m. Eastern Standard Time on May 17, 2021. Again, you could either dial these numbers or join him on the link on there. Now, moving on, you were looking into a little bit of the price over book. You're looking at 0.97, which is considerably undervalued. Price over sales is 420, which is still on par with what the market in general is on the SP 500s. And some people have been saying this is apple to oranges. It gives you or actually just a little bit of an overview of the market's valuation in general with these fundamentals. And so they are comparable in that sense. Now, when it comes towards forecasts, we don't have any information there regarding price targets in general, but on March 9th, we did have a $10 neutral rating by Credit Suisse, and then looking into Citigroup, buy with a price target on 19th on February 2nd, 2021, and February 1st, 2021, JP Morgan neutral at a price target of $15. Now, keep in mind that these will probably change after the earnings, as they often do. Now, institutional buyers, something interesting had happened. But before we move on to there, if you would like to see more contents like this, make sure to scroll down below, click that like button, subscribe to this channel, and turn your bell notifications on. It really helps my channel a lot. Now, if you would like to join our Discord and chat with us, link is in the description below, totally free, no commitments. So, taking a look into here. Take a quick look into Vanguard adding almost 26,200,000 shares. Now, quick thing is that I noticed that back on the 12th of April, the exact amount of shares were added as well, but now it's reported as a 13F. Now, I'm not sure exactly whether that's also like a 13F and a 13G. Did they double their investments and try to average down? Or is it a sense where it's somehow more of double, like reported multiple times? And from there on, we get to see Wolverine trading 38,225 shares. California Public Employees Retirement System, 170,000 shares. Oasis Asset Management, so you're looking into 100 million shares, and you get to see a lot of companies have been adding millions and millions and millions of shares. It's quite interesting to see this much bullish action happening in such a short amount of time. We're looking as well back onto just May, the last 2 weeks. So as you get to see, even BlackRock added around 2 million shares back in 7th of May, battling Gifford and Co. 5.14 million. And so yes, it definitely does look bullish. Now, a quick thing towards Vanguard. And what we see here is that, or what we're trying to see here is Clover's actual position, whether it's duplicated or not. And we get to see here, the only report that you have for 13G is actually on the 12th of April as a new addition. And so I think it's just more of a replication there that might have happened in the error in the system. But in general, they're very bullish in terms of institutional buyers. Now we can move on towards technical analysis. Now, from a technical analysis standpoint, what we get to see here on the 1-day perspective, 10 SMA is above 30 EMA. That is bullish. Now, that bullish indicator clicked on the 12th of May. Now, 50 SMA price point, it's below there. So that's a bit of a bearish part. However, the ADX is more stable, perhaps indicating more of a slower move. And the MACD is a little bit sliding downwards. Now, this is a little bit of a normal behavior towards earnings, and the market has been sliding just a little. And don't forget, there is a short interest closer to around 35% to 36%. Now, I'm not saying that this entire move from 11.77 to $7 is just from shorts, because previously it was around 20%. So yes, they doubled the short interest, but in the sense, can a short squeeze happen? Yeah, it can go to $15 perhaps in 1 day because of a short squeeze, but I really doubt that will happen. Now, another thing here is that it's highly oversold, around -89. Similar to the RSI, the willing percent R tells you oversold or overbought. And the MACD here is going a bit more negative. Like it's the MACD is going more bigger and bigger on the negative side, indicating a little bit of hesitancies from the market itself as momentum's dropped to -3. Now, on stochastic fast and stochastic slow, they're both on the bottom, indicating that perhaps you can get another bounce here or there. Now, moving averages. This one here actually trades within Bollinger Bands, not really moving averages. The Bollinger Band at the top is 1049. At the bottom, it's 717. So start expecting for it to trade within those two levels. Now, on the Fibonacci retracements, we see significant support and resistance level on the Fibonacci retracements that are different than the traditional ones, to give you a bit of an overview on perhaps some key levels you might want to look at. For instance, here the Fibonacci retracement shows a resistance at 890. Above there, 1049. Above there, 1178, 1307, 1491, and 1725. Significant support, 632. Now, let's move on towards price line action. So from a price line action standpoint, though, there is a closer support towards it, where it's currently sitting at 733. But there's a more interesting one closer towards the $7 that is, if it's being tested, that can easily drop back to the 630s. Now, in terms of resistances, a very strong one is at 763. Above there, 824. Above there, 893. Another 970. 1035, the 97, and then upwards to 1179 to 1243. Comes to the question to Ed, what do you think about this one? Now, I definitely am a fan of them and what they do. Now, a quick thing here is that where are they going to be moving, and if they can actually realize that 2023 net profitability. My views on this one is I'm a bit more bullish in the longer term than bearish. But when it comes in towards the shorter term, you're going to have insane volatility coming in Monday and Tuesday, depending on how the market actually lies as well. If the market is sideways, and even if you get beating earnings, you need to have a really good surprise for it to launch forward. However, if it meets earning or kind of doesn't in any kind of sort of view, it would drop probably to the $7 or $6.30. But I think that is a temporarily short-term lived drop that you can have before you actually move on forward into a bounce, because a lot of people want to buy the dip for this one for a longer term. And you might even, the worst case scenario, I think, is you're going to get a drop, accumulation, and then it slowly bounces back. I think that is the movement or the direction we're going for. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day.
Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.